Missing?
Ramki, good afternoon.
Good afternoon.
We're
Nikita,
waiting
are
for
you
you,
there?
sir.
PPT is missing.
Yes, yes.
Yeah. So, company law settlement scheme 2014 came. There also again with a 75% waiver of additional fee, the companies were allowed to file the all pending non-filings and pending filings. Again in the year in the year 2020 during the COVID time, and companies fresh start scheme was introduced in view of the impact of COVID pandemic and to provide ease of filing and avoid the additional fee implications on the companies. Ministry again has introduced the one more scheme called the Companies for a Start scheme, and thereafter in the simultaneously for the LLPs also there was a scheme, LLPs settlement scheme in the year 2020 and also 2021. So now the fresh scheme, this companies compliance solicitation scheme. So
So,
by and large, all the, see the ministry objective of the ministry is to see that no companies should not stay in the registry with non-compliances in terms of filings, especially annual filings, because annual filings relating to the financial statements and annual return where most you provide the details of the shareholders and the directors and other important details. So ministry wants to have at least these documents filed and updated with the registry. So so that's why we were seeing so many schemes ministry issuing, and whenever such scheme has came, and after the expiry of the scheme, ministry has came out with a serious enforcement action of issuing show cause notices and striking, and also striking of the companies in case the non-filings are still pending and the companies have not done the filings made good. So they had stuck up ATMA, if you en masse more than 2.5 lakhs companies they have stuck off which have not filed the financial statement.
so
So
sir, how do you see this scheme is different from other schemes?
yeah, so more or less, if you recall this scheme is more or less in same line with the company law settlement scheme 2014 and also company law settlement scheme 2000. Small here and there, because of the new forms have changed. Even 2013 itself, the forms have changed. The ministry has moved from V2 version to V3 version. Complete forms have changed it. So, and these are the few changes. And immunity, of course, immunity was there earlier also, and now also they are providing the same immunity from the non-complaints for non-filing the or delay in filing the documents.
But at the time of COVID, there was zero penalty. Here we have a 90% reduction. That's the kind of, commercial change.
Yeah, yes.
It was nil. Now we have to pay at least 10% of our
Yes,
registrations. So
yes.
we'll start. We'll take
Yeah.
two slides.
So yeah, see the scheme broadly provides for three objectives to be achieved by the companies or by the ministry. The first objective is to basically to regularize the companies. Yeah, I think somebody is saying speaker voice. So first objective is to regularize the company. Sudarshan, how is my audio now?
Your audio is clear,
Yes,
Ramke.
yes, it's
Clear.
better now.
Thank you. Maybe Nikita audio, you check your audio, Nikita. Yeah. So the objective first is regularization. So regularizing all the companies which are sitting with non-compliance in terms of for filings. So objective is to encourage such companies because especially for annual filings, if you recall section 92 and 137, the section 433 provides for per day basis additional fee of 100 rupees with a maximum fee of 2 lakh rupees. So one document if the companies have not filed, so the per 1 year it runs into almost 3.5 lakhs up subject to maximum of 2 lakh. So the companies have not filed the returns for let us say for 3 years, last 3 years. For each document you end up paying 2 lakh rupees. And likewise for 3 years minimum annual return financial statement. Let us say 3 years it's almost kind of 6 documents. 6 lakhs means like almost 12 lakh rupees for a simple filing of financial statement. There may be scenarios so company were not doing, they were doing it but not doing thereafter, or there may be kind of scenarios where there may be disputes among the board, among the shareholders, and the companies would have gone into deadlock situation, not proceeding further, no board meetings, no financial statements, no audit, nothing. But such companies but has an asset, but because of the various reasons they would not have filed the returns. If those companies, in case they have to file a return, now they end up paying so much, lakhs of rupees. So in order to encourage such companies for a genuine reasons, so most of the times maybe the non-filing could be a genuine reason because of the economic conditions, like a COVID scenario, even present scenario like geopolitical scenario, the war between US and Iran. So a lot of companies are directly or indirectly getting impacted. Then operations are getting impacted. So their more focus is on operations, and they generally they delay and neglect on the compliances. So in order to encourage such companies, provide immunity and also provide waiver of the large huge amount of additional fees and penalties. So this scheme has came, and it is a wonderful scheme. So I think so many schemes earlier also they introduced, and this scheme also in similar lines introduced with a great benefit to the corporates. I would sincerely request all the professionals that this scheme has to be popularized among the corporates who have not done the filings, and see that corporates are benefited greatly for non-compliance. And second objective is to dormant status. Say there may be scenario companies would have started business operations and then or for a future project or for keeping an IP or keeping an asset in the company, and but operations have not started it for various reasons, and such companies may not have filed the returns. So if those companies not file the return, they can simply file the returns, avail this benefit of additional fee of only 10%, and then apply for keeping the company under dormant status. It's like once you move the company into dormant status, those companies are not required to conduct except one board meeting, not required to file any returns, and only the annual return they need to file it. Otherwise, all other complaints with respect to companies are not with respect under the Companies Act, they need not to comply. The third objective, what they're trying to see that those companies, if they see that there is no future and there is no potential opportunity to continue the operations, and they don't want to carry on any business and want to discontinue, they can straight away do the pending filings and with a less 10% additional fee, and straight away they can apply for striking off the companies from the register of companies. So these are the broadly three major objectives of this scheme, Nikita. Yeah, coming to the validity of the scheme, I think if I'll recall, the scheme was the circular came in the year 24th February 2026 and effective from April 15th. And I think enough time they have given, almost more than 45 days they have given in advance about the scheme and its utilities. And most of the people would have, I don't know, would have planned well to avail the scheme, but those who have not planned well and done the pre-work, they can still avail the scheme. And
Those
the
who
scheme
have
is
not planned well, it's perfect time for them. They can plan well. We
yeah.
have still time.
Okay, this time uniquely this time scheme as came was really announced almost 50 days before it is coming into force. So
Yes.
we had almost 50 days. So I think great opportunity, great occasion, facility given by the people, so that the professionals and companies can gear up and make those these pending compliances, or if the books are not updated, they can have the books updated and keep and get the accounts ready and completed and audited. So, and this scheme is valid only for the 90 days, expiring on June 15th. I think in the past also we have seen this that the schemes were not, they were not extended any schemes, hardly any scheme they have extended. I also see this scheme, possibility of extending the scheme is very meager. So yeah, I just previous slide, Nikita. Yeah, so what is covered is all annual filings for the period up to financial year 2024-25 is covered, and consequences non-filing, as the scheme is loudly saying that they end up paying full additional fee apart from enforcement and risk of striking off those companies. Yes. So companies which are eligible under the scheme, the circular it clearly says This it's applicable to all companies, private, public, one person, Section 8 company, and foreign company, except where companies where a so-called notice is issued, or prosecution is launched, or adjudication proceedings are initiated, or where companies chosen to strike off their name, and the final stake off notice like STK 7 issued by the Register of Companies, and companies who applied for making the status into dormant status, it's not applicable, because as such, when they apply for dormant status, ROC will insist the filings to be done. So if you applied means obviously you would have filed the pending filings. Vanishing companies, more or less inactive or vanishing companies, also not applicable. And companies dissolved pursuant to amalgamation. Why this, especially this is provided? So when a companies are dissolved pursuant to amalgamation, the the situation of companies dissolved means mostly transfer of companies. Transfer of companies getting dissolved pursuant to amalgamation may not have a scenario of having non-compliances, because as a part of the scheme, NCLT insists the report from the Register of Companies and Public ROD, Regional Director. So they would ensure that before scheme is, while they file the report, they will insist that companies should do the non-compliance made good. Then only NCLTs will pass an order for amalgamation. So those companies obviously may not be. In fact,
that compliance check is
yeah,
already
yeah.
been taken
Well,
care
so
by the
it
Register.
is not required explicit to say, but maybe there may be some scenarios where if such scenario, because some of the NCLT's practice is that they wait for the ROC report, RD report to come, and one or two hearings, if the report does not come, NCLT did not wait for the report of ROCs. And if the professionals are not pursued with ROC RD, they can proceed and pass an ex parte order. Something like this. And second, this scheme is exclusively only for companies, not for LLPs. Yeah.
Companies, including foreign companies also.
Yeah.
Right.
Your voice little low, Nikita. Just try and see.
Okay, I have actually connected the full volume.
It has
I'll be
further
little
reduced.
louder.
Okay, no.
Yeah, I'll be louder because occupied the entire class.
On and off. It is going off and again coming.
Yeah, I'll be louder.
Okay. Yeah. What are the forms which are covered under the CCFS scheme? As I already mentioned, all the annual filings like MGT7, that is the annual return, MGT7A applicable for small companies, financial statements like AOC4, AOC4 CFS where consolidated financial statement is applicable, AOC4 NBFC for NBFC companies, and AOC like Ind AS and AOC for CFS or again for NBFC CFS, AOC for XBR, it is applicable. ADT1 for appointment of auditor, and Form FC3 and Form FC4 foreign company filings. So while we say that it is applicable for all annual filings, but ADT1 may not be every time annual filing, but ADT1 why they included possibly could be that if the companies have not done the audit, necessarily they have to get the audit done. There may be scenarios so the auditor might change. Auditor may not continue, may not be willing to audit the past year records. In such case, companies have to appoint the new auditor and file ADT1. So I think Ministry thought ADT1 could be another obvious filings. In some of the cases, companies might do that. So they have extended this facility even for ADT1 filing.
To be clear, this ADT1 is regarding the AGM, not for the casual vacancy.
Yeah, true. As you rightly said, the tenure of the auditor, because normally up to the end of the conclusion of the financial year, they have to come up to the completion of audit. If the auditor has not submitted resignation, and if the companies have not filed the return, let us say more than 3-4 years or whatever, more than 1 year, and his tenure will continue. As per that, the tenure of the auditor is till the conclusion of the next AGM. If the AGM is not held, till the AGM is held. In the sense, the audit has to be completed and the AGM has to be conducted, because one of the duty of the auditor is that they have to respond to the queries of the members, if any. So the Act contemplates the tenure is from the conclusion of the previous AGM till the conclusion of the next AGM. Even if it is not held, till it is held, their tenure continues. So if they have not resigned, then it is understood that they have continued in the office. So that's how they, the auditor role will be there. That's how the necessity of NOK in case that such auditor doesn't want to continue now. If the companies start asking for audit to done, they may not be willing. Various reason they may not be willing, and the companies might have to change the new audit in its place. So that causing the need for AD1 to be filed. That's how AD1 is included.
Yes.
And apart from this, even the scheme is applicable for 1956 scenarios. Hardly see, because when so many schemes have come in the past, like if you see, to a company law settlement scheme 2000 was there, company law settlement scheme 2011 was there, company law settlement scheme 2014 was there, and company CFSS 2020 scheme also is there. When so many schemes were there, are there any still companies which had not filed the returns under 1956 Act? Chances may be very less, but we don't know, because ministry has extended this. Means as per the ministry records, there may be cases where companies would not have filed the
They
returns.
might be. So this
There
is
might be. There might be.
Ramke,
Aramna.
Ramke.
You want to
Hello?
add something? You want to add
Yeah,
something
I want to add something. In the auditors, the problem here, what they are facing is generation of UDIN for the financial
that is there,
statement.
Ramana. That is there.
The-
Next
the-
slides. No, that is there. Next
Okay.
slide. Confine only to the slide. If any
Okay.
is there, add it. And that, I think the slides are there. DUD and all slides are there.
Okay.
Yeah. So this scheme applies not only the facility for waiver of the fee for the annual filings and other forms. It also the waiver was extended to even for making application to keep the company under dormant state, and also for striking of the company, that waiver of 50% of the normal fee for the making application to dormant status. So the fee for small and OPC companies is like 1,000 rupees for authorized capital of 25 lakhs, and from 25 lakhs to 50 lakhs as per the original notification, 50% a normal fee. Now today, small company authorized capital is up to 10 crores. So even up the companies which are up to 10 crores authorized capital and they want to apply, still they get a waiver of this 50%. So the original fee was 2,500. So for them 50% waiver means I think they end up paying only to 1,250. Other than small companies, the fees again based on the authorized capital, up to 25 lakhs 2,000 rupees, 25 lakhs to 50 lakhs 5,000 rupees, 50 lakhs to 1 crore I think 10,000 rupees, and 1 crore to 10 crores it is 15,000 rupees, and 10 crore and above it is 20,000 rupees is the fee for applying making application to ROC for keeping the status of the company into dormant. So with this scheme, 50% of the site away, 50% the fees gets remission. Likewise, strike off. For strike off, I think the fee is 10,000 rupees.
10,000.
So at 25%, that means you end up paying only 2,500 rupees. So this is the scheme. This is the benefit available under the scheme. Go to the next slide. Yeah, I think last line is there. The scheme is not applicable for cost audit forms. Yes, this is not applicable for cost audit forms, and they end up paying normal fee, and only they end up paying one normal fee. No waiver of the additional fee for the cost audit report. Yeah, see the illustration of what is the benefit in terms of quantification. What is the financial benefit in terms of fee? Is that assume a scenario of a case where annual return is not filed. So for annual return, the maximum normal filing fee is 600 rupees. The normal late fee is let's say for 300 rupees, 300 days delay, 30,000 rupees. But if it is more than 300 days, Nikita, more than 1 year, it is how much it comes?
Could be double, sir.
Yeah. So maximum is 2 lakh rupees.
Yes.
So 1 year for 300 days scenario, the normal scenario they end up paying 30,600 rupees. But now with the scheme they pay only 3,600 rupees. That means 10%.
Definitely a pocket friendly scheme.
Yeah, pocket friendly scheme. and because of the small and medium-sized companies paying such big amounts may be difficult. Huge. And financial statement, you see the financial statement. I think you are given a 100 days delay, but for the same 300 days delay, even for the financial statement, 3,600 rupees. And dormant status, yes. The fee implication is that, okay, as I said during the previous slide, that 50% remission and 25% remission will strike off. So only additional fee waiver is there, not on the normal fee. Never ministry can come for waiver of nominal fee. So only additional fee they can waive it. Yeah. Yeah, what is the legal benefits under CCFS scheme 2026? Legal benefits rather could be
Because
like absolving the companies from the consequence of prosecution and adjudication. If you closely read the section 403 and relevant sections of the Companies Act like 92 and 137, see for the non-compliance, for a non-compliance, what is non-compliance in the whole scheme is delay in filing the form. So 433 provides that if there is a delay in filing the form, such forms can be filed with additional fee, but without prejudice to any action under the act, under this section. What is the prejudice to another action means? Like for a delay in filing itself is violation. By paying additional fee, the violation won't get ratified. Still, the violation continue on your book. ROC can launch a prosecution, issue a notice, so-called notice, and launch a prosecution for violation in non-filing of financial statement within 30 days and annual return within 60 days. Payment of additional fee does not absolve you. So that is the non-compliance which is on record. This scheme is trying to address that non-compliance of non-filing returns within 30 days or oblique 60 days, and any consequences of prosecution, adjudication can get immunity for that. So once for all, that immunity companies can do that. If you recall, if in case of the professionals who was involved in the due diligence during pre-IPO time or during takeover and acquisition times, or mostly these scenarios, the professionals end up noting all such non-compliance. Though there is a additional fee, the filing was made good by paying additional fee, but this theoretical non-compliance still exists on record, and especially for the companies which is going for IPO, SME or main board IPO. So the merchant bankers and the legal counsel who is doing their due diligence will put a red flag on this delay in filings, and they insist that no companies should go for adjudication of those non-compliances. So again, if you go to adjudication,
clearly also in the diligence reports,
diligence
that the company has filed with
diligence.
complaint.
Yeah. So it is a big relief if company is planning for an IPO or SME IPO. It is big relief, so that without any adjudication proceedings undertaken by the company, simply file the forms, pay the additional fee of 10% only, and get a waiver immunity. So it's a wonderful scheme for such kind of companies. So that is immunity from prosecution. Financial relief already we have discussed. Clean slate opportunity. Yes, company record gets cleaned in terms of filings. So you filings and so see companies, especially companies which have joint ventures or which have the investment FDI into the companies. The people will look at what is the compliance of these companies. So they're more conscious about the compliance. Non-compliances, especially foreign investor, would not want to have on record. They see that all non-compliances made good, then only they'll come and do the investment into the company. So for such companies, it is a great opportunity, and great responsibility is cast on the professionals, because the professionals are the one who can well understood the scheme and the benefits. So we all need to appraise the companies and see that scheme is benefited largely to the companies.
And
Yeah.
the recheck also, just recheck if any of the filings are missed. It's a recheck opportunity.
Yes. Sure. Next. 445, yeah, dormant company status. I will not discuss the process for dormant company status. Basically, you want to, in case companies do not carrying on the business and has an asset. Say company has an asset, you can't go for a strike off. Please understand. Company has a liability, you can't go for a strike off. Company balance sheet should be nil, then only you can go for strike off. In such companies not doing operations, but this audit, filings, board meetings, so many AGMs becomes burdensome for such companies. So because of the UDIN issue, as Ramana was mentioning, because of the UDIN issue, again those companies definitely get into trouble in case they don't do the online real-time compliances, annual-based compliances. So the wonderful opportunity for them, which has come in the form of Companies Act 2013, keeping the company in the dark. That is dormant
Yeah.
company. So 455 gives that opportunity, and now this scheme also gives that opportunity to apply for the dormant status by filing the non-filings with additional fee of 10%. Yes. Go to next slide. Next slide, please.
Yeah.
Grounds for strike. Okay, this is all procedural aspect. Let's not deliberate much onto that. 251, 252 fraudulent application for strike off. Yeah, see, if first strike with an intent to deceive or defraud. Yes. So deceive and defraud means strike off is possible only if the balance sheet is nil.
Nil.
But if the balance sheet is made nil by suppressing the facts with respect to liabilities, of course, you have the consequence of, again, any creditor proceeding against such companies and directors and reviving the source companies. So that consequences will always be there, whether you avail the scheme or not. So deceiving the creditors and opting strike off option and making the company stuck off under register of companies will definitely have this risk, inherent risk under 447.
Okay. And
Yes.
there are few practical.
Voice is low.
There are few practical scenarios which we will be deliberating.
Yeah, scenario 1, audited financial statements approved but annual filings not done. I see this scenario, generally this scenario should not exist, because when audit is done, obviously no IT return would have been filed, and then professional auditors would insist that no, the filings should have been done. But in case any such scenarios where only companies have filed the IT returns and not bother to file the returns with the register of companies, so those companies simply file them, because there is no non-compliance with respect to the AGMs and all. When audit is done means UDIN would have already generated.
The scenario 1 is quite practically easy. Just avail the scheme and take the benefit.
Practically easy. Audit is done and audit report received means you would have received with the DUN wherever UDIN is required, and of course wherever UDIN is not required, obviously there is no risk there, because companies for the financial year prior to 2019 UDIN was not there. 2019 onwards UDIN was there.
So we'll go to
simple case, file the returns under the scheme and get with additional fee of 10%, get the immunity. Next.
So now we'll go to a different scenario.
Yeah. Audited financial statements not prepared. Basically, this is the big challenge. This is a challenge, especially challenge in terms of conducting the AGM, because filings are always based on the AGM date, not the audit, and not the status of audit, and not the status of company. And UDIN is always UDIN is possible to generate only on a current date. For those years prior to 2019, of course, UDIN is not applicable, and for the UDIN by the auditor, statutory auditor, by the secretarial auditor and compliance auditor, I think prior to October 1st, 2019, no such requirement. But if the non-filings pertains to period post 2019, there is a challenge. Challenge in terms of, can we have the AGMs recorded in corresponding financial year? Answer is definitely no. Reason being, one, the backdated AGM, though you do it for the sake of compliance, it is not possible, and you can't obtain a UDIN we had occasions where the both the professional institutes have come out with the amnesty scheme, allowed the professionals to generate UDIN for the past filings and all. I think see what all these things will tell us is that government is giving enough window opportunities for the professionals and also for the companies to see that non-compliance is made good and by availing these schemes. So somebody who has not availed those schemes and somebody who has not utilized those opportunities means I can say that those are the people who are not vigilant enough to make the complaints record good. But reasons could be various. We can't assume and we can't attribute all these things to all the companies across the board. Various reasons. So even if the cases where they will not utilize those schemes, and then if the scenario is what is falling under the scenario 2 here, for them option could be have the AGMs recorded on a current date, get the audit done on a current date, you get the UDN easily. You can generate the UDN by both the professionals, auditor and secretarial auditor and compliance auditor, and record the AGM compliances and file the returns under the scheme. Definitely you will get the benefit of additional fee, but only one thing, see, additional fee in case you are recording AGM on a current date, the due date for filing is what? Due date for filing is what? For a financial statement, those section says that if the AGM is not held within due date, you might provide the file the balance sheet of what? Only it says that unadopted, say two scenario. If audit is not done, you file the provisional balance sheet. Something like
you file the provisional financials within the due date only.
Within the due date only.
Yes.
Afterwards, if the audit is completed, you have to file again.
Yes, you have to file again.
Yeah. So those companies recording their AGMs on current date, financial benefit, I don't see there is not much. Because for them due date is 30 days, 60 days from current date.
Yes.
So current date. They do non-compliance good by filing the forms and paying the normal filing fee, hardly any additional fee for them. But they'll make the companies non-compliance good. They'll make the companies non-compliance good in terms of only filings. But coming to the AGM, because Act insists that AGM has to be conducted within certain period. It says that within 6 months from the date of end of the financial year. If the AGM is for the past financial year is conducted today, then there will be delay in holding the AGM, and section 92 or 96 comes into picture. So that violation will continue to be there. And maybe those companies who can apply they have to go for adjudication. They have to go for adjudication, get that complaints made good.
Yeah. So scenario 2, there are really, it will be a problem for the companies.
No, not major benefit, not great benefit, unless you have the gender, because you can't generate DIN at current date.
Yeah. So I guess we have answered Venkatramana sir's question.
No, you had some DIN slides. We will discuss them.
For the UDINs.
Yeah.
Scenario 3.
Adjudication under section 455 already initiated. What next? I think circular is very clear. If adjudication is already initiated, I don't think you can initiate the steps. Adjudication is already issued so-called notice, initial proceeding against the company. Then but if within 30 days of issuing notice, if you can avail it. You can avail the scheme and by filing the pending filings. But after 30th day, you can't avail the scheme. Yeah.
So here 30 days is the catch point in scenario 3.
Yeah, 30 days is a catch point. 30 days is a catch point. I don't know whether ROCs during this scheme period whether issued any so-called notices.
You have to check that.
Yeah, I don't think.
Scenario 4.
Yeah, finance non-filing of finance statements for the made under the Astral 1956 Act. The chances could be very less, like companies having non-filed returns for the which are due under 1956 Act. As a scenario, though, there are companies for them this filing is required. They can apply, they can file those, they prepare the financial statements and complying AGM formality, blah blah blah. They can also file under this scheme. One challenge is what forms you will be filing. Forms, I think the previous forms that 56 forms, that form 20B, 20, 21AC, all these things I think available.
Yeah, all these
but
forms are available on V3 portal.
V3 portal, but you have to
Yes.
file them under V3 model.
Yes.
Yeah.
And all these old forms are now web based.
Yeah, see, yeah, there is one change. I think after 2011-12, I think the format of financial statement has changed it. So when format of financial statement has changed, and if you want to have the balance sheet prepared and have the audit done, get the audit done, you are forced to make the financial statement and current date. Though
Yeah.
during the respective years, the applicable format is old format, but since you are getting the accounts prepared now, audited and adapted now, you end up preparing the financial statement as per the new format only.
Okay. Moving to next. The
What is it?
FAQs of
FAQs. So you read out what is the objective of companies complaints with risk we already addressed.
yes.
When does the scheme commence and when does it also addressed?
Addressed all these
Question
two
3 also already addressed. 4 also already addressed.
Yes.
Is the scheme able for annual filings pertaining to financial year 2024-25?
Yes.
For year 24-25, obviously yes.
Yes. And point number 6 also is addressed with the illustration.
Yeah. Yeah, you read out the question all.
Yeah. Okay. Is there any concession on the normal filing fee for annual filing?
No, I already said
Yeah, already
never,
said.
because even the ministry MCA has no authority to
Yes.
give fee waiver on the normal filing fee. I think they can only touch on the additional fee, not on the normal fee.
Yes. 8 and 9 are not only what are the benefits you are getting.
Pardon?
Already discussed.
We already discussed this.
Yeah. Point number 10. Does the scheme provide immunity from penalty? And is there are any requirements to file a separate form to avail immunity?
Yeah. I think already we have discussed the immunity with respect to prosecution, adjudication under section 403 for delay in filing forms. All the forms, whatever forms you file under the scheme now will be the forms which are filed by delay. So delay filing is the non-compliance which gets which is there on the record today. So that delay filing has a consequence under section 403, and ROC can issue a adjudication notice by launching a prosecution. So you will have immunity for that.
Yes.
Definitely, you don't need to approach ROC. ROC did not initiate prosecution. And if you recall, if you see the consequence of such for violation, consequence of such violation under section 92 is 10,000 one-time penalty of 10,000 rupees, and you have 100 rupees, no?
Yes.
Yeah, you have 100 rupees per day is there, right? Apart from additional fee, the consequence under 92 subsection 3 and also 137 subsection 3 is 10,000 rupees and 100 rupees per day, maximum 2 lakh rupees. So this is the additional.
Ramke.
Ramna.
Yeah, I just want to add one point. When 454 section was amended, they have introduced one subsection in November 2022, I think 23. What they have done is, if you are filing the balance sheet and annual return within 30 days of the giving the notice of ROC, then there will not be any prosecution. That is already inbuilt in 454 section.
454.
454 section, what they have done, When they have introduced,
Can you take me to the corresponding section?
yeah, yeah,
Which subsection?
I
454.
will, I will take it to you. I will take it to you. What they have done is when they
No, I know,
have
I
made
recall,
100
I recall that. Yeah, if you have filed within the, after issue of notice, if you have filed it, so the prosecution under 92 or 137 will be dropped, Bolke. Can you just,
that is inserted in 2020 Amendment Act.
I am
This
asking you
is
what is that
subsection
provision?
3. Subsection 3B,
Yeah, proviso.
class B.
Subsection 3.
Provided that in case of default relates to non-compliance of subsection 4 of 92 or subsection 1 of or subsection 2 of 137, and such default has been rectified either prior to or within 30 days of issue of notice by adjudication officer, no penalty shall be imposed in this regard, and all the proceedings under this section or in respect of such default shall be deemed to be concluded.
Yes. So meaning thereby, assume scenario during the scheme and after the expiry of the scheme. If the during the scheme, if the ROC issues adjudication notice, you file during the scheme by availing the 10% file additional fee, and since you would have filed within the 30 days of, assuming that you filed within 30 days of issue of notice, by virtue of section 454 subsection 3 proviso, you will get immunity directly. So you don't need to apply. It's clear as that. Law itself is provides for that. But after 30th day of issue of notice, that's what even the circular itself says that.
Yeah.
The intent of circular of giving 30 days is that because if within 30 days you will file it, it's fine. After 30th day, if you file it, even Act does not, since the Act does not permit. So I think even scheme has also will not permit. And after the scheme expires, if the ROC issue a notice, adjudication notice, and you file the forms, what you lose is that 10% benefit. 90%
Yeah.
waiver and 10% filing fee, you will lose that. And of course, within 30 days thereafter, if you file the forms, that benefit will continue. But the waiver of filing fee, you lose that.
Yes.
Thank you, Ramana, for bringing that point.
Okay, boss. Okay.
Next
Is
thing.
immunity also available against default of section 96?
No, there is one more question. Is there a requirement to file a separate form? See, earlier in the previous company law scheme, CFS scheme, there was a requirement of filing a form to seek immunity. Interestingly, this time they did not ask.
Yes.
But they did not ask you to file any form.
Yeah.
But how do you claim immunity on record? Because there's so many in the number of companies which are availing this scheme is much. Obviously, you while this circular says that immunity is given to you, but immunity is the deemed immunity that if you
Ramki, maybe the reason that this 454 after implementation, they cannot anyway prosecute for 92 and this 137. So only
yes.
it may come for, so there is no requirement of immunity at all. It is already, anyway you are filing it.
Already you are immune.
Filing it, anyway you are filing it, but the scheme extends to 881 also, form FC3 and FC4.
But the problem is, even ministry doesn't have the, mechanism or the resource to prosecute for this kind of minor.
That is okay, practical scenario, that leave it.
Practical, yeah.
But the point noted, well noted, what you were saying, because by virtue of 454 subsection 3 proviso, the prosecution is absolved. This absolved by virtue of availing, by virtue of filing the form within 30 days of issue of notice. Yes. Yeah. But Ramna, if assume that ROC has not issued a notice, okay, the scheme is valid for a period of 90 days.
Yeah, it automatically implies that even without receiving notice of ROC, any point of time, if you are filing the pending forms, there will not be any license, prosecution of any this thing, violation for these two filings. on account of these two filings. That's why what they have done, they have
I think,
introduced
yeah,
100
understood,
rupees fees
understood.
per day. No.
Yeah, yeah, as long as notice is not issued, you can make good by filing the annual filings. Once you make the annual filings, as far as 92 137 is concerned, like financial statements and annual return, I think the act itself is diluted to the great extent that no prosecution will be launched. As long as you file them before before issue of notice, or even after notice within 30 days of issue of notice. Great. Next.
Is immunity also available against default of section 96, which we have already discussed?
We already discussed.
Point is addressed already. Is the scheme also available in cases where the financial statements of the company for the past years have not been audited?
Yeah, done. We addressed already.
Yeah. What happens if a company doesn't avail the scheme?
Obviously, I already said if they don't avail the scheme, then prosecution, payment of additional fee of whatever it is at the rate of 100 rupees, maximum of 2 lakh rupees, and then immunity. Of course, immunity, you can avail the immunity provided if the immunity with respect to 92 annual filings, financial statement and annual letter, you can avail immunity provided you file them within 30 days of
30
notice.
days.
Even after, you assume that even after the scheme, you can still avail the benefit, but paying the full additional fee.
Full fees.
Yeah.
Can a company use the scheme to regularize multiple pending filings?
Yeah, all the filings which is permitted under the circular, this scheme can be extended.
Okay.
Yeah, next.
Point number 16 we have already covered. So what should company do to take benefits of
If it's covered, and you go to next question. Don't repeat.
Yep, I'm reading point number 17. In case the company intends to get its name struck off, is the company required to file only the form STK2 form under the scheme at a concessional fees, or is it mandatory to file all the pending forms before applying for strike off?
I think as I've seen as per my previous experience, ROC is not allowing you to do this strike off without making the non-filings good. So unless you see the scheme itself says that the scheme is meant for filing the non-filings and then applying for strike off. So
Yes.
directly you're supposed to file the filings and then only apply for STK.
Complete the pending filings and then go for strike off.
Yeah.
The LLP is eligible to
I
take
already
advantage
addressed. It's
of.
not covered to them.
Okay. In the year 2019, companies were required to file E-Form Inc. 22A. If any company has not filed this form, then can it take benefits of the scheme?
If you recall, there is a one-time filing requirement of making the company to file form INC 22A. Basically, this INC 22A was indirectly insisting the companies to make the filings good. So if filings good, and all such companies which have not filed the annual filings, they kept the company's status as active non-compliant. Active non-compliant, something like this. So in order to make the company active compliant, you are forced to file the forms and then INC 22A. If you have not filed the INC 22A, file it, do the pending filings, and then you have to file INC 22A.
Okay. How cost effective is filing of forms? Already discussed.
We have discussed with tabular.
If any company is desirous of discontinuing its business operation, then does the scheme provide for any option? Yes.
Provide an option for strike off or dormant?
Yes. Does the scheme prescribe any conditions for receiving this immunity?
No. Only condition is filing the forms.
Yes.
Only additional point I just want to add here. If the company's amendment bill passes, then the companies which are to be striked off, which are not yet striked off under this scheme, they can be going into dormant mode, and now the ministry will have authority, so they themselves will put you into the dormant mode, and after 3 years they will remove you from the records. That provision, that enabling provision, ministry is getting from the amendment bill.
Okay.
Yeah, section 248 they're getting amended to include that either you, if you're not carrying on business for 2 years and current year, either you should apply for dormant, and if you're not applied for dormant status, it's the ground for strike of the company.
Right. Hmm.
So,
So
see, indirectly, no, wait. Indirectly,
Hmm.
this scheme is a precursor for no alarming, giving a signal to the companies who had non-filings on record that no post amendment comes, serious action government want to take. Government want to spare any companies with sitting with non-compliance as to the filings, annual filings is
Yeah.
concerned.
Yeah. So the
Perfect,
scheme.
Ramki. Perfect. Actually, even our professionals, not to propagate about 10 discount of 90%, they should propagate about the
This point.
consequences which are coming on through amendment.
Yes.
Then
Yeah.
only people will rush.
Yeah, so see, indirectly it is an enrichment and education to the companies. Obviously, what falls with is that is an opportunity for us to see that no, you make non-compliance good, make and also make fee out of that. So definitely, no, it is a definitely it's a big opportunity if there are many companies who have not done the filings. Next.
And 22. If the company has not done annual filings for more than 3 years, and as a result, the directors of the company have been disqualified under Section 164, subsection 2 of the Act, in such circumstances, if the company does annual filings under this scheme, then will the disqualification of directors be removed
So at this
post filing?
see, section 164 is very clear. Disqualification does not ipso facto gets removed by virtue of doing non-filings.
Yes.
Once disqualification attracted, it is valid for 5 years. He can't act as a director. He can't act as a director. Act as a director. So disqualification will continue. After 5 years, I think you end up you might apply and get the
Ramki,
arm.
Ramki, here the disqualification is not for the company in which default lying. It will be default for all other companies. So once they file for this company, then disqualification will be automatically allowed, but they have to file that form.
No.
Removal of disqualification form.
When we say disqualification not for continuing as a director, disqualification for appointment and reappointment. So obviously, if there is appointment within the company, he will be disqualified. If is if the appointment in another company, he will be disqualified. Reappointment within the company, he will be disqualified. But
Correct.
wait, if there is no reappointment required, especially private companies and small companies, you don't need to reappoint them. So for them, may not be an issue there. But disqualification as a director will be continuing for 5 years.
Yes.
Next.
Since year 2019, some documents like statutory audit report, secretarial audit report, along with the financial statement, require mentioning of UDIN on the date of signing the document. Can the professional sign the audit reports for previous years along with the UDIN generated as on current date?
Only current date. Answer is yes, only on prospective date, not for the. Obviously, you can't generate prospective dates unless there is amnesty scheme issued by our institutes. You can't do that.
Which was, recently the amnesty scheme was on 15th April only.
It's already expired.
Yeah, it's expired. So there was a window of 15 days.
Yeah.
The
Next.
annual filings related e-forms, FGT7 have migrated. Yeah, this we have already answered, that all the forms are available on P3 portal.
Yeah, okay. Next. Go to next then.
During the period when the scheme is in force, if the company is filing the forms for the financial year 25-26, will it be subject to discounted filing fees?
Will it be subject to discounted filing fee? I think it's obvious. For the financial year 25-26, due date has not yet came, and company due date is to hold the AGMs till September. So hardly any such these companies will avail this scheme.
At least scenarios will be there, right?
Additional fee scenario would not arise for any companies for the financial year 25-26, or if the financial year ending on December 25, they have time up to June. to hold
Yes.
the AGMs. So the scheme is may not be relevant for those companies for the financial year 25-26. Some query here, a company was under dormant status during the financial year and had complied with the okay. As a change, just take that query, Nikita. Some
Fine.
chart box, you change the queries. Read out the query.
I will.
No, down chart box, madam.
Was under dormant status during the financial year and had complied with the applicable provisions and filed MSC 3. Subsequently, the company made an application for obtaining active status and ROC approved the.
Your voice is going off and coming. Nikita, what is problem with your system?
Uh, now, during the same year, can you hear me now, sir?
Yeah, yeah.
Now, during the same year, do we need to call for AGM? If yes, what needs to be adopted as financials are already filed with ROC?
See, as per the query says that no, the ROC is approved and in the month of April 2026. Such company financial year for March is over. March is over. And it has to for the year 2000 during the year no, during the year 2025-26 gone. Your PPT is gone. What is happening, madam?
Sir, you can continue. There is some technical error here.
Yeah. So during the year 2025-26, the obligation of conducting AGM, placing the accounts will come in force. But what financial statements you will be filing? Obviously, financial statement for the financial year ending March 2026, you end up filing it. So you may not have any transactions per se. Prepare a financial statement. Prepare a financial statement as per the format. You may not have any entries, mostly except capital and maybe any expenses like with respect to ROC filing fee, annual fee paid to ROC and blah blah. You make a simple financial statement and you end up filing that, placing that in the AGM and filing them after the AGM.
So this, we have solved this query. CS Hello's Lab. The query was from.
Yeah. You have any more? Yeah. Next.
Yes. Does the scheme apply to form CSR2 as well?
CSR2, basically, you make the screen big here. You use that button, PPT. Take the help of technician, madam.
Yeah. One second. Now CSR2 is anyhow it's a linked form.
Yeah. The question comes now whether you need to file CSR2. It is a linked form. You don't need to separately file CSR2 for the period. What is 2010-11, if I'm right. For the period, if the CSR2 pertains to that period, you don't need to file separately. You'll be filing as a part of AOC4.
So that question is answered. Companies already facing final notice for being struck off by the registrar cannot take advantage of the scheme.
No, already addressed. No, final notice means what is final notice? STK 7. SS7 is final notice where ROC issuing a notice saying that all formalities to strike off the company is complete. It's kind of a publication in the official gazette. So they can't avoid.
Key takeaways and action points.
Limited window, 3 months, 90% fee waiver, immunity available, obviously. See, I suspect ministry may come out with some filing requirement asking them to, if at all immunities they want to take and give you on record. They may come out after the scheme is expired, they may ask to file a form. We don't know. unless in the previous scheme they are asking is part of the scheme, but now it is missing in that. So, but as I'm now also mentioning, automatically by filing the forms, the all prosecution gets dropped. So that is part of the act itself, 454 subsection 3 proviso. So that could be a reason they would not have come it. But if ministry wants to come, they might come after the scheme is expired.
Multiple filings, AGM default.
Multiple filings, okay, but AGM default not covered, definitely not covered. They can't do this. It's only for filings. The scheme is only for filings, for not doing the other compliances in terms of action.
Yeah, and there is only one portal now, which we all are aware. It's P3 portal.
Yeah. Fine, okay. These are defined.
Covered. Community provisions, annual filing versus other filings.
Yeah, this scheme is only for annual filings and ADT1 and Form FC3 and 4, but not for other forms. Ministry is concerned about the financial statements annual return, and these are the crucial returns where where generally disputes arises among the directors, among the shareholders. And ministry also want to know what is the statistics with respect to the business, income, revenue, profits, and CSR. Blah blah blah. So they are concerned about only these forms, not for other forms.
The next slide: non-applicability, asset
We have discussed this. Yeah. Next, go back one slide. So there can be a scenario where companies strike off with assets and operations. Assume that company is struck off, but there is an asset in the company. So if, as far as my knowledge and experience is concerned, for reviving such company, what is criteria is that company should be carrying on the business. Having an asset in the balance sheet, static asset in the balance sheet, may not be ground for NCLT to activate such companies, revive such companies. So initially they allowed it, but now they are not allowing it. But what happens to the asset? Asset, see, if company is stuck off, asset is lying in the balance sheet, the stuck off companies can be moved into liquidation process, and there is an NCLT judgment which says that there is no bar in the act for initiating liquidation proceedings of a company whose name is struck off by the Registrar of Companies. So what will happen basically is that in this case, the aggrieved party can go to approach NCLT, and NCLT will order for liquidation of such companies by appointing a liquidator. Then liquidator will proceed with the liquidation process and deal with that asset and distribute the proceeds among the shareholders, the creditors. After paying the creditors' dues, they will distribute to the shareholders. So this will possible only where ROC has taken an action and struck off the companies, only those cases. Otherwise, company initiated actions, the condition is that company balance sheet should not have assets and liabilities.
So for those companies which have assets and have been struck off, for them the scheme is not a window. For them, they have to directly approach the NCLT.
Yeah.
For liquidation, right?
Yeah, at least for liquidation, obviously, because what will you do with an asset? See, in the sense, those companies only has an asset and they want to avail the scheme, but status is struck off. Unless company is activated, you can't do the filings.
Yes.
Assume that you approach NCLT with a prayer that I want to make the compliances good by making the filings. NCLT will look into it. What is the purpose of only making the compliance good? Company is already struck off. What will you do with making compliances?
But there might be a scenario that they want to restart their operations. Then there is a valid point.
You have to plead and present and convince the NCLT that you are getting an opportunity. Some evidence you need to prove to the satisfaction of the tribunal, in my view, that yes, there is very possible to revive it, because company might have some expertise, might have some potential strength, asset, and which you want to put to use, and because of the put to use, and you had some signed off a proposal with the party, but you are not able to proceed with because the company is struck off. So if you prove to the satisfaction of the NCLT might allow such companies, but whether you want to whether you can avail this scheme means you we don't know. We have to try and make a submission to NCLT for a quick, immediate interim order for
If any interim order for NCLT.
allowing the companies to file the returns, because scheme is only valid for next month, or maybe till July 15th. So within this period, I think you can avail it, provided if you are succeeding in getting some direction from NCLT to avail the scheme. Yes.
So, any questions?
Next slide.
Next slide is.
Yeah, I see some query in the chat box, Jesse.
No, one more.
No, you need not close this, madam.
I'm reading the query. I feel in few scenarios the scheme will be applicable for 25-26 too. For example, if AGM is concluded on 30th April 2026, then the due date for filing AOC 4 and MGT 7 will be 29th May and 27th June.
True. So still, see, as far as both the forms is concerned, due date is not yet over. Due date is not yet over. So you can file AOC 4 till 29th of this month, and annual return till 27th of next month. So when due date is, so there is no non-compliance on record. There is no non-compliance in record. So when there is no non-compliance in record, need for availing the scheme by seeking a waiver of additional fee may not arise, sir. So in case, assume that in case even after June 30th June or 27th June, if such companies not file the AOC 4 and annual return, yes, they can avail that. So the window for them is non-filing up to 27th June 2026 is the window. After that, you can obviously you can avail.
So the two queries which were there in our chat box, which you have addressed.
Thank you.
Yeah, yes. Madhav has returned yes also.
Yes.
Any further queries?
If there are no queries, we can conclude. And so
but with this, we got more clarity and a deep dive in the scheme. Basically, we all were aware about the scheme, but this is different scenarios we want. So definitely, I wish we all professionals educate this scheme to our promoters, our corporates, and see if there are any missing filings or anything which which someone else missed the last few years filings. So this scheme is really an opportunity.
Yeah. See, we always feel that the ministry always feels that all the three professionals are extended arm of ministry to achieve the objective of ministry. So we being direct in contact with the having access to the companies and all, I think it is a duty on professionals to educate the corporates that no such scheme is available, and see that you make your non-compliances good by filing the forms.
Yes.
Thank you.
Still, the Q&A window is on. If not, then we can conclude today's webinar. Thank you, Ramakrishna sir, and thank you, Venkatramana sir.
Thank you, Nikita. So,
Thank you.
Thank you.